all our stakeholders, including our customers, shareholders, employees, and the broader ecosystem for their support and helping us in creating sustainable value for the economy. Let me start first with a brief description of the present global and the domestic economic scenario. Global growth remains resilient with easing inflationary pressures and tight employment conditions in spite of geopolitical and extreme weather event risk. The IMF in its latest April 24 World Economic Outlook raised the global growth forecast to 3.2% for the year 2024, which is 10 basis points higher than its January 24 update, and expect the global economy to grow at the same pace in 2025. Global headline inflation is expected to fall from an annual average of 6.8% in 23 to 5.9% in 24 and further to 4.5% in 25, with advanced economies returning to their inflation target sooner than the emerging markets and the developing economies. Commodities and energy prices can drag the economic and the growth prospect by infusing sudden shocks on the supply side, a collateral impact of escalating geopolitical tensions at multiple fronts. However, in this backdrop, as far as India is concerned, the conditions are, however, shaping up for an upshift in the real GDP growth, backed by the strong investment demand and upbeat business and consumer sentiments. CPI inflation has already gravitated to 4.9% in March, after averaging 5.1% in the preceding 2 months. CPI inflation is expected to moderate in ensuing months and is expected to taper to 4.5% in financial year 25 compared to 5.4% average in financial year 24. In financial year 24, the credit offtake of the all scheduled commercial bank recorded a growth of about 20%, while deposit grew at about 13%, and the momentum with some moderation is expected to continue in the financial year 25 too. I'll now discuss the broad bank's performance parameters. Once again, we have delivered excellent numbers. I'm happy to share that our net profit for financial year 24 is the highest ever at rupees 61,077 crore, showing an increase of 21.59% over financial year 23. Our net profit for the quarter 4 of the financial year 24 is at 20,698 crores, which has increased by 125.87% sequentially. This is despite incurring wage revision expenses of rupees 13,387 crores during the current year period as per the bipartite wage settlement, and after absorbing the additional liability to the tune of rupees 7,100 crore relating to pension liability and the DA relief neutralization in the third quarter as a one-time exceptional item. Our ability to absorb the above liabilities without significantly impacting the long-term profitability outcomes of the bank demonstrate the resilience of our balance sheet. ROA of the bank stands at 1.04% for financial year 24, and it has improved by 8 basis points over financial year 23. The ROE for the financial year 24 is at 20.32%, which has improved by 89 basis points over financial year 23. We have been consistently delivering ROE in excess of 15% for the last 7 quarters. The cost-to-income ratio of the bank is at 55.66%, including wage revision expenses and excluding the impact of the one-time exceptional item of pension liabilities and dearness relief neutralization in quarter 3 financial year 24. Excluding the wage revision and one-time exceptional item, the cost-to-income ratio would be at 49.34%, which is an improvement of 315 basis points over financial year 23. Non-interest income has shown a growth of 41.15% in financial year 24 over financial year 23. Our deposit has grown by 11% YOY and term deposit has grown by 16% YOY. We are mindful of our liability portfolio as it provides a stable stream of resources for us. We continuously monitor the concentration of our deposit profile daily, ensuring that dependency on the wholesale funding is contained within the prescribed levels. Liquidity coverage ratio stands at 124% as on 31st of March 24 and is well above the regulatory benchmark. I am happy to highlight that the credit growth has been robust across all the segments. Our retail, agri and MSME, which is popularly known as RAM, advances have crossed 20 trillion mark during the year. Out of the above, retail personal advances constitutes 13.5 lakh crore, which is 13.5 trillion. Agri advances are at 3.05 trillion and MSME advances stands at rupees 4.33 trillion, growing at the rate of 14.68%, 17.92% and 20% respectively. The corporate segment is also showing healthy growth at 16% plus YOY growth. I am glad to share the progress we are making in digital banking. 61% of our savings bank accounts are opened through YONO in financial year 24, and we are also leveraging analytics with significant business accretion. Now it stands at 1.37 trillion as against 1 trillion in the last year. This is essentially attributed to our analytical leads, which we are leveraging full, and it has led to about 32% growth in the digital acquisition of the business. With regard to asset quality, our gross NPA ratio has improved by 54 basis points YOY and stands at 2.24% as of March 24 and continue to be at its lowest in more than 10 years. Our net NPA ratio has improved by 10 basis points and stands at 0.57%. Slippage ratio for financial year 24 has improved by 3 basis points YOY and stands at 0.62%. The consistently improving asset quality is also reflected in our credit cost. For financial year 24, it stands at 0.29% and has improved by 3 basis points on a YOY basis. We are well provided for our loan book with PCR including OCA standing at 91.89% and PCR excluding OCA stands at 75%. While we are glad about the outcome in the current quarter, we are also conscious of our areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings deposits. The cost base of the bank is high. However, the same also reflects our focus on compliance and establishment costs. We aim to lower our cost to income ratio by focusing on the income side. Our CET ratio now stands at 10.36%. It is the highest since the implementation of Basel III norms. Additionally, the current ROE profile of the bank remains above the credit growth trends, and hence we foresee CET1 accretion going ahead with the help of our plowback of the profit. However, the bank is open to raising equity capital if the growth trend so warrants. Our subsidiaries are also consistently performing well and continue to create significant value for all our stakeholders and most importantly for our customers. To conclude, I want to thank you all for your support to the bank and also showing the confidence in the bank's ability to perform. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. My team and I are now open for taking questions from all of you. Thank you.
Thank you so much, sir. Now we move to the question and answer sessions with media. To ensure seamless flow of the session, we will move from this end to that end, allowing everyone an equal chance to ask a question. We request you to please follow the format and restrict yourself to 2 questions. Focus on back only. Now I request Gopika from Mint to start.
Congratulations, sir, on good set of numbers. To begin with, could you tell me what led to the increase in fee income this quarter, especially the miscellaneous fee income? So sequentially, fee income has seen a good growth. Could you tell me that? My second question is on the recent RBI draft rules on profit finance. How have you assessed it? What kind of an impact will this have on SBI's P&L?
Yeah, the first question is relating to your fee income, and fee income, the major contributor to the fee income has been the loan application fee. It has gone up and it has been contributed by CCG, Commercial Client Group, and also by SME also. And also that is nothing but a reflection of our growing loan book. And apart from that, of course, we are seeing good growth in terms of our forex income, and also we are seeing good growth in terms of our cross-selling income. So I think the fee income piece is something which is, I hope that we will be in a position to sustain this, because now it has become part of the way we conduct our business. Your second question, which is relating to the RBI recent discussion paper which has been brought in. Well, I think we have done some assessment, but I would say that as of now, this is too premature to really comment on that, because it is still a discussion paper, and we will be reaching out to RBI and also with our views on what they have proposed, and let us wait for the RBI final decision in this matter. But nevertheless, I would only like to say that we have made some broad assessment, and based upon those broad assessments, even the incremental provisions which are required to be done would not be really significant for us. We will be in a position to absorb those kind of additional provision numbers without much of disruption. And also the fact remains that if at all those become the reality, maybe the pricing of such loans will also be revisited.
Next question is from Joel from Economic Times.
Good afternoon, sir. I wanted to understand, you all have increased your provision, though the asset quality is improving year on year. The provision, have you made any counter-cyclical provisions, or is it something different there? Can you
No, see, what happens is, even for the standard assets also we are required to make the provisions. So because our loan book is growing, so that is leading to additional provisions. It is not because of the quality issues. Yeah.
Also, net interest income is a little weak, 4% growth, 3% growth, single digits. NIMs also have fallen year on year. I just wanted, firstly, why is net interest income? Is it because the cost of funds has increased? Is that the main reason?
See, the point is that there is always a time lag for the readjustment when it comes to the loan book and also the deposit book. But I think we have already plateaued as far as our deposit cost is concerned. So I don't think so that we will have even more impact on this. And secondly, as far as the loan book is concerned, that also we hope that we will be having a repricing of the loan book also going forward. So I think the net interest income, what you are observing today, and what you mentioned in terms of the growth is something little than lower than what you expected. This is essentially attributed to that.
So it will only improve.
It will. We are only.
NIMs, so the outlook for the
NIM actually, I think globally, if at all you look at it in the industry, the NIMs have come down. But as far as we are concerned, we have assessed and we are hopeful that we should be in a position to maintain the NIMs at this level. And in fact, if at all we will look at our NIM, which is domestic, is about 3.4, is actually at 3.46.
So you expect to maintain it?
Yeah.
Clarification on the pension provisions, is it all done?
All done.
So there's nothing to be done?
Nothing to be done. Even for that matter, even for the employee provisions also, we have kept almost about 1,700 odd crores. 1,700 odd crores, because there are some items which are beyond the pay slip also, where the decisions have yet to be taken, but we have kept enough cushion for that. That's a buffer which has been kept.
One other observation, the corporate growth, loan growth is stronger than the retail. I think it's pretty rare.
No, see, the point is that I would say that the SME growth was more than 20%, followed by that was the agriculture, and then the corporate. So, and also the fact remains that post RBI instruction relating to RWA for the unsecured credit, naturally we have moderated the growth there, but we have ensured that. So that is we have to of course take care of how best we can optimally utilize our capital.
All the best.
Thank you.
Next question is from Mr. Ram Kumar from the Hindu Business Times.
Yeah.
Sir, how much credit and deposit growth you are expecting in this current financial year?
See, much of it will depend upon how the economy looks like. But yes, of course, we are hoping that we will be in a position to maintain this growth trajectory which we have recorded this year also, somewhere around 15 to 16%. Earlier, I used to maintain 13 to 15% kind of a growth. I would still maintain that our growth as far as loan book is concerned should be in the similar range, 14 to 16%. And when it comes to the deposit also, we are expecting about 12-13% kind of a growth. 12 to 13% growth.
This growing current account has been a challenge actually for all banks. government has come out with this just-in-time system. So how do you tackle this challenge?
No, see, as far as the current account is concerned, the market is split between the government and the non-government. Non-government is trade, commerce, industry, trust, etc., etc. So it was more than about almost about a year back, somewhere in October last October 22, we recognized this kind of a trend and we started identifying the potential areas from where we can raise these current account deposits, and we have already come out with more than 40 odd transaction banking units across the country, which is essentially meant for garnering the current account. So this is intended to substitute our dependence on the government, and it is so over the year we have invested into this initiative, and we are quite hopeful. We have already started seeing the traction. When we look at our daily average balances, we are seeing good traction in this.
You said that you are open to raising capital. So
Yep.
where do you want to take your capital to? Right now it is around 14%.
Yeah, 14%. Its capital adequacy ratio is 14.28, no? 14.28. So our CET1 is also the highest ever. But if at all the growth will be seen on the ground, which will be more than what we can support, even with the current capital adequacy ratio also, we can support the balance sheet, loan book growth of about 7 trillion. So we normally don't get to see that kind of a loan book growth. Our loan book stands at about 37 trillion today. So that kind of a number is there. So it is actually at about 20-21% if at all we will grow. Then only we need the capital. But nevertheless we will be very closely evaluating the situation and will ensure that we stay well capitalized always.
Next question is from Richard from the Economist.
Thank you, sir. Sir, you said you are monitoring the condition of the wholesale funding. So, what are the reasons behind that? Are you going to aggressive on retail deposits for that?
We are always believing in going ahead aggressively going ahead for the retail deposits.
So, one more thing, there was a report said you got approval from the government to buy a sales stake in the SBI.
I would not like to comment on this. This is all these are all guess items, and I would not like to comment on that.
Thanks, sir. Can you share some detail of the loan pipeline?
Loan pipeline, we have got almost about 3.5 to 4 trillion worth of loan pipeline. Sorry?
4 trillion.
4 trillion.
How much private and government?
About 75% would be private and about 25% would be government.
Next question is from Hitesh from the Indian Express.
I just want to know what has led to this 24% rise in your profit in the quarter?
Sorry?
What has led to this 24% rise in the quarter?
See, quarterly profit, you have to see it in the context that last quarter we had provided about 23,000 crore, which was 7,100 crore was only on account of the pension provisions which we were required to make one-off, and another 15,000 crore we were required to make for the wage settlement which was happening. So, as against that, in this quarter we were not required to make the 7,100 crore, that is one, and also when we finally arrived at the requirement for the wage provision also, it actually came down to almost about 700 crore only additional was required to be provided for. So with that is the reason, that is one of the main reasons why this time we have registered this kind of a growth. Apart from that, last quarter always we have some annual charges which we recover, which is not there in in every quarter. So that is also the other contributing reason.
Is it this 15 to 16% rate growth? Where do you see it coming from?
I would say that as we have seen in this quarter also, our SME book has grown almost about 20%, Agri has grown about 18%, and similarly when it comes to retail about 16-17%. We expect a similar kind of a trend going forward also. Sorry? Corporate also about 16% growth is there. We expect we will actually, the kind of pipeline which you are seeing, we are quite hopeful that we should be in a position to see good traction.
Next question is from Shayan from Mint.
Hi, sir. So beyond, say, roads and infra and renewables, are there other sectors where you are seeing growth?
Yeah, we are seeing growth coming from the conventional industries, which are, apart from that, what you mentioned in terms of road, etc., the multiplier component of the infrastructure spending is almost 4 times. So, which actually means that once infrastructure is given a push it gives a significant push to all other industries also. We are seeing good traction coming in from batteries, EVs, and also semiconductor. So all these are the opportunities which are there. So we are seeing good pipeline from all of it.
And so for the full year, in that retail personal loan category, there's been some increase in the gross NPA number for the full year that we reported.
0.70 to 0.77, and also and also let me explain to you, there also out of 3,800 crore worth of slippages which are there, 800 crore we have already pulled back. It's all this is reckoned at a point of time. So, but the fact of the matter is that over the period of time we are in a position to recover significant amount of whatever is reckoned on a particular date.
Next question is from Anthony from the New Business Line.
Sir, if I look at your employee headcount from 2020, FY 2020 to now, there seems to be a reduction of about 27,000 people. If you can help us understand where this reduction is happening, what is the kind of bench strength that we should see from SBI going forward, and how we should expect recruitments to come?
See, traditionally for past couple of years we are not replacing all our retirements. We are only recruiting 75% of whatever retirements happen. And the fact remains that we have significantly invested into technology, and which is helping us in ensuring that we should be in a position to improve the productivity of our workforce also. So that is one of the reasons why it is at around this level. Going forward, how it will really look like, I expect that it will be somewhere around this level, because we are growing well also. We have our expansion plans, we have got our plans to go to areas where we are not really represented well. So I expect that it will be around this level only. And also of late we have started building up our cadre for the technology, and we are hiring from the market also for the technology skills, and I think we will be around this level only, but the skill level will certainly look up also.
With respect to this project finance related aspect, you did mention that if it is required, you will revisit pricing on these loans. Based on your assessment currently, do you
I
believe
think
that-
this is, as of now, this is more of a guess item, for the simple reason because it's a discussion paper currently. So till such time it becomes a regulation, we will not be in a position to firm up our view relating to how we should really absorb this kind of a cost. I would only like to mention that whatever additional costs would be there, it is something which we can absorb very easily.
Can we also pass through very easily?
I think so.
Okay, so one last question if I can add. Your provisioning on standard assets has actually come down by about 320 odd crores. There's been a pullback in provisioning. Is this a one-off that you see in this particular quarter, or with the kind of performance in the retail assets, you think that this is a trend that one should see retail also in terms of asset quality holding up well?
Retail asset quality has always been one of the best with us. So I think I don't envisage any challenge on the retail asset quality. Even for that matter, what we are observing, even in agriculture we used to have NPAs as high, gross NPA as high as about 15% somewhere in 2020. From there we have bring it down to 9%. Similarly, when it comes to SME, there also the gross NPA used to be somewhere around 5%. From there it has come to about 3.5% now. So I think the trajectory as far as the credit quality is concerned, we are quite confident that we should be in a position to maintain this kind of improvement, because we have invested well in terms of our credit processes, and also when it comes to retail, we have invested in terms of the loan management systems, which has got the rule engine embedded into it. So I think that is something. These are the reasons why we feel that we should be in a position to maintain the asset quality in probably the best of the shape.
Next question is from Siddhi from Reuters.
Clarification process in the record quarterly profit for now.
Record quarterly, record annual,
Right,
both.
So,
Huh?
Every quarter we are creating.
yes, right. So, my question first is on your interest expenses, which have grown 32% YOY. Wanted to understand the reason behind that. Is that only attributable to cost of funds, or are you also sitting on excess liquidity?
No, we are sitting on the excess liquidity. That's not a challenge. In fact, as far as the excess SLR is concerned, it would be about 3.5 trillion.
Yeah.
3.5 trillion was the excess SLR. So naturally, I mean, if at all, I mean that is something which is a buffer for us. Now, the other piece is that when it comes to interest expenses, last year we have raised infrastructure bonds. Last year we have raised some tier 2 bonds. So those are also the factors which are also adding to the interest expenses.
So my second question is on technology-related expenses. How much of technology spends for your operating expenses in terms of a percentage?
Normally, sir, we don't disclose that number.
But I would only like to mention, I mean, just to put your anxiety at rest, we invest well in terms of technology, and we will continue to invest very well in the technology. Let me tell you this.
Any number?
Ma'am, actually,
We are, as a matter of principle,
we have never given.
we don't disclose it, and it is very much there in our books.
The industry average or
Sorry,
if you spend at the industry average level, it will be 78% or more?
much more than that. I will only say this.
Next
We,
question is
let me tell you that we are the largest spenders on the technology.
We exhausted your budget, the tech budget.
See, you have to understand one thing. When it comes to budget is always set up in a manner what all we would like to achieve. So, and if at all I start including our AI also, Gen AI also into this, that may not really impact the delivery on the ground. So I think those things should not be looked into. Essential aspect is what concerns you have in terms of are we spending well? Yes, we are spending well, and much more than that of industry. Budget, don't compare with the budget. Budget would have many more things also.
next question is from Vishwanath Nair from NDTV Profit.
Sir, with regard to your personal loan or the unsecured retail portfolio that's mid-teens at this point in time, is that the range that you want to maintain going ahead? Because you said you pulled back on the average.
3.53 trillion is our retail unsecured. Huh? How much?
3.4 it is express credit alone.
3.4 is our express credit. But as of now, as far as the potential is concerned, as out of the potential, we would have tapped only 25%. This is a product which is available. We don't want to push it. But if at all people want to avail it, they are most welcome.
The other question, since so much conversation has happened around the expenditure, OPEX has not really moved up as much. Quarter on quarter, it's largely flat. Year on year, a little bit. I mean, if you look at FY23 versus FY24, so upwards slightly about 4,000 crores. I'm just trying to understand why that number is not showing what you're talking about. High spending.
Maybe you like to add something? Can you please? देखिए OPEX invariably has
gone up by 20%.
I think 20% OPEX growth is a decent growth. We are not a IT company, man.
No, sequentially it doesn't move much. But
No, see, the point is, as far
year-on-year.
as bank is concerned, the employee cost is defined, and when it comes to interest cost is the one which is there, and on the top of it, what we incur is the technology. So that is something, and the various acquisition, PSLCs, etc., etc. These are the major components of the OPEX cost.
Development has grown by 23%.
So that is.
By 15%. Staff expense is the main factor, 24.3%.
And actually, in the staff expenses would be staff which is involved into IT also.
And IT, what you're looking at is included in the
Miscellaneous expenses.
So you're not getting the picture of IT,
Yeah.
which is 40,000.
Next question is from Benichan from the New Indian Express.
So
Sorry?
What is your project loan book currently? You said there is not much impact on it, but what is the AUM? Project loan AUM?
Project loan book would be somewhere around 50,000 crore.
No, it would be more.
No? Just one sec. Just one sec. I will. Yes. I have it. I'll just let you know. 1,21,000. Yeah.
2 months ago, the finance ministry asked the DSPs to review the gold loan book.
We have no challenge. No challenge. We have already reviewed, and it is before the finance ministry. We have got a very elaborate inspection management audit set up in our organization. And gold loan we have not been doing from now. We have been doing from ages, and we don't have any challenge on that. I think our agri gold loan has already crossed 1 trillion, and it should be about 1.5 trillion would be the gold loan book.
Personal is around 25,000. 130. Around 130 together. Personal gold loan and agricultural gold loan.
Yeah.
Next question from Piyush from Financial District.
Sir, Supreme Court yesterday, they said that bank, when they give loan to employees, concessional or at a lower rate, they're not, you're now supposed to pay, that will apply normal rate of that of a customer. So, taxation-wise, the unions had went to the court seeking some relaxation. So, just wanted to understand, sir, not what SE did, but will it be retrospective in nature?
We have to review the judgment.
This is subject to Supreme Court judgment. We will have to. We can go in appeal also. That is one way. We have yet to review the judgment.
You have not reviewed whether it's retrospective.
Yeah, we have not reviewed.
And what would be the, employee, what would be the sort of impact that?
That I think we will study.
No, I think we will evaluate, and then only we will be in a position to comment on this. This is premature actually.
Okay, sir, in tech-wise, you said that you won't reveal the investment number, but in terms of YONO 2.0, sir, what's the update, and will it be like a proper super giant app with payments, lending, everything in one phone?
Yes, it is going to be the digital bank within the bank. That is one. Secondly, we will make it. It's more modular. It will also ensure that we should have the hyper personalization, and it would be uniform experience across the channel. So it's a significant investment in terms of, and significant upgradation in terms of the product profile, which is going to be seen. But yes, of course, it involves a lot of investment in terms of time, money, etc. But yes, we are all carrying out. It is much on track, and I think we will be in a position to roll out at least the first product somewhere in the month of July.
Next question is from Manojit Shah from Business Times.
Yeah. Sir, your loan loss provision for Q4 has jumped 157.65% on a year-on-year basis. Sequentially, also it's not at 7%. What is the reason for this jump? Is there one particular very large account which just came to Q4?
कोई स्लिप नहीं किया भैया.
These are all small value.
ये सब स्मॉल वैल्यू अकाउंट होता है. जो परसेंटेज आप बता रहे हो ना, जरा एब्सोल्यूट अमाउंट बताओ कितना है. 37 ट्रिलियन की बैलेंस शीट है यार, है ना. 3,300 करोड़ कुछ आप हुआ है, स्लिप हुआ है, और उसमें से भी 800 करोड़ पुल बैक हो गया है. देखो वो मैंने आई एक्सप्लेन्ड अर्लियर ऑल्सो. सी द स्लिपेजेस, NPA percentage, it is all reckoned on a particular date. So when it comes to the recovery effort, it continues on a daily basis. So already we have pulled back out of this slippage about 800 crore plus. And if at all you look at the slippages, the percentage slippages, it has actually come down as compared to last year.
And loan loss provision has come down. 4% से बढ़ा है. In Q4.
Q3 to Q4, sequentially,
Q3 to Q4 में
but amount,
374
absolute amount is not much.
374 crores. Is nothing.
Another thing I know is that the total slippages in FY24 is about 20,317 crore. What were the slippages from this project finance part?
None.
No.
None.
Zero.
Why you are thinking project finance is based? Is no. So do you think that this discussion paper has come looking at State Bank of India? You are mistaken. You are mistaken. Absolutely mistaken.
The point is that since they have increased the provision, so the
No. This is.
These are all.
Let me tell you. Perhaps they have got in mind that the risk is not properly priced, but not by State Bank of India. There are many other entities which are not pricing the risk properly. So that is the reason. Not for us. We have got a very elaborate department which is looking into project financing activity, and we are the only bank which has got this department.
no slippage.
No other bank has got this project finance SBU. So we have developed specialized capabilities for carrying out the appraisal for project finance and for lending to the project finance activities.
But sir, overall, if you look at the provisioning environment, we have the ECL norms will come soon. This we have already there. The new investment norms that require some provision. So provisions will go up going ahead.
See, that is something which is, this is merely a discussion paper. ECL norms also, the guidelines have yet to come. So I think RBI is evaluating very comprehensively what is the likely impact, and they will be very mindful in terms of when they roll out the guidelines.
And as regards provision, we already have a buffer of 33,000 crores.
ऐसा है कि ECL के लिए तो जो है या ECL provision के लिए our assessment was somewhere around 30,000 crore to be defrayed in 5 years. So as against that, if at all you will look at our non-NPA provisions today, it stands at 35,000 crore.
32,000
वही है. So we are. You need not worry about this. I think we are there to worry for you. Don't worry. We'll take care. We are quite confident to handle these situations. No issues.
Other point you made that open for raising funds. Will it be equity, because you can also plow back capital, plow back profit. So what are the thoughts on that?
We will decide the instruments at the material point of time. But yes, of course, we are quite open for raising 81 also, and also equity also, if need be. But since our plowback itself is quite handsome, and as it was mentioned that our ROE is much higher than our loan growth, so which very clearly means that every year it is actually net capital accretive, net CET accretive. So this difference between 20 and 15, that is something which gives us the buffer. But nevertheless, as I mentioned, that we have got adequate capital which can support 7 trillion worth of loan book growth, which is actually 20%. So 20% का growth. इकोनॉमी को अगर 20% हमें ग्रो करना है, इकोनॉमी should grow somewhere around 12-13%, because the way we look at it is the nominal GDP growth plus inflation rate, and we normally grow 2% over and above that. That's the principle. I'm sharing with all of you the principle now. Yeah.
Next question is from Astha from 18 now.
Thank you so much, Sir, for having us. My question is, what sectors do you see that the majority of loans are coming from, or they will grow in the next fiscal year?
See, as I mentioned, that we will get to see the loan growth coming in SME, agri, retail, and corporate. And corporate also, the new lever of growth is essentially renewable, EVs, batteries, and also battery storage. Then, of course, the cell manufacturing. So all these are the areas of growth, and there is a huge investment being committed by the leading groups in the country. So that itself will unfold opportunities for growth in the corporate sector.
Next question is from Ekta from Z Business.
सर अभी हम लोन्स की बात कर रहे थे कि आप बता रहे थे कौन कौन से सेक्टर्स में आप लोन ग्रोथ देख रहे हैं, लेकिन इलेक्शन टाइम में क्या आपने लोन्स में कुछ स्लो डाउन देखा है? स्पेसिफिकली इफ आई आस्क अबाउट एग्री लोन्स,
ऐसा कुछ नहीं.
इलेक्शन का कुछ इम्पैक्ट नहीं?
Nothing like that.
और सर बैंक्स ने अपनी जो मार्जिन्स को लेकर गाइडेंस है FY25 के लिए वो कम बताई है, आपका क्या आउटलुक है?
हमारी एफर्ट है कि वी शुड बी इन अ पोजीशन टू मेंटेन द निम एट द करंट लेवल.
ओके एंड सर वन मोर क्वेश्चन, आपने अभी बताया कि टैक्स स्पेंडिंग जब आप अपना पूरे का पूरा आउटलुक बनाते हैं, बजट बनाते हैं, यू आल्सो मेंशन्ड AI. तो क्योंकि RBI भी बहुत रोबस्ट कह रहा है कि बैंक्स को कि उनका टेक और रेजिलियंस रिस्क जो है वो बहुत ज्यादा स्ट्रांग होना चाहिए, आप जो टेक में स्पेंडिंग कर रहे हैं उसमें किस तरह के बदलाव हम देख सकते हैं बैंक के, अगर हम डिजिटल प्लेटफॉर्म्स की बात करें, किस तरह से आप उसे और रोबस्ट बना रहे हैं और सिक्योर बना रहे हैं?
देखिए, दिस इज अ वेरी वास्ट सब्जेक्ट एंड व्हेन इट कम्स टू परहैप्स दिस 1 hour meeting may not be good enough for describing all this. But the fact of the matter is that this is a subject matter for the specialists, and we must invest into the right skills. We must engage with the right partners, and we are ensuring that all that what is required to ensure the resilience in the tech platforms, that should be taken care of, and we are doing that. And we are constantly in touch. We stay in touch with RBI also to know that what is their mind also.
Thank you so much. Anything sir on gold loans, क्योंकि उसपे भी
No challenge. In our total book of 37 trillion, 1.5 trillion is gold loan, and we have been doing gold loan for last 10 years plus. We are bigger than any of the gold loan company in the country. So we have got
NPA is just 0.16%.
0.16% is our gold loan NPA.
सर आपने अभी वेज रिविजनिंग में कुछ 700 करोड़ की जो बात की, am I right with the number first?
ये 7,000 नहीं, अच्छा वो जो आप कह रहे हैं, हाँ, जो हमने एडिशनल रखा हुआ है बफर, दैट इज 1,700 crores.
और सर वो जो वेज रिविजनिंग है क्या वो पूरी हो चुकी है, और इस क्वार्टर में कितना उसका अगर आप नंबर अगर आप define
वो सब हमने जो है कर दिया है, ऑलरेडी प्रोवाइडेड फॉर है एज फार एज द वेज रिविजन इज कंसर्न. ओनली देयर आर फ्यू परक्विजिट्स व्हिच रिमेन्स टू बी फाइनलाइज्ड by IBA. So we are just waiting for that, and for that also we have kept a provision of 1,700 crore, which to our mind is adequate, more than adequate.
इस क्वार्टर में हमने सिर्फ 669 क्लोज किया है और कैपेसिटी जो रेसिडुअल बचा है.
Thank you for that. Thank you.
Next question is from Preeti from Bloomberg.
So you said that the loan pipeline was 75% from the private sector. I'm just curious how that's changed over the course of
No, even last year also, last quarter also,
70-30.
we are, I think more than 3 quarters, this has been the composition.
And you said that you were seeing loan growth from places like renewables, which has been constant, renewables. But you also said that you were seeing more demand from traditional sectors. So what kind of traditional sectors are you talking about?
Iron and steel, cement,
Aviation,
All basic
airports,
industries.
services.
all core industries, all core industries.
Even CRE
And so
also.
I know that you didn't give any guidance on tech spend. You did say that it's definitely more than.
No, I think it is not for the media or the in general for the general consumption, but it is for us to ensure that we should spend well.
Yeah, I know. You said that it's definitely more than 8%. You're the largest spenders. So when you said more than 8%, are you talking about it being part of operating
We
expenses?
didn't say anything about it.
We did not say anything.
We didn't say anything about it.
We only said that it is much higher than others, many others.
Somebody said from their own that it is at.
Next question is from Gayatri Nayak of Economic Times.
My question: what is your excess SLR in your book?
3.5 trillion.
And what is your portfolio that are marked for HTM?
What is?
Yeah. We'll give you the separate numbers anyway. I'll separately give you that.
Okay. And then my third question was, in your retail portfolio, home loan growth is slightly slower than your overall retail growth.
No, see, the point is that as far as absolute sanctions are concerned, it's quite strong. But the fact of the matter is that we have got the repayments also. Huge amount of repayments are also happening. So that is the reason why the net growth at times looks to be little slow, but it is not really so, because the growth is essentially has to be seen in terms of the sanction.
My context is that we are seeing a lot of growth in sales of residential units across cities. So, in that context, I would like to understand your assessment of home loan growth.
No, that's what we are saying, that home loan growth as far as sanctions are concerned, that to
21.40.
21.40% is the growth in the sanctions.
Disbursement is 17%.
disbursement, see what happens is that disbursement will happen over the period of time. So 21% sanction, 17% disbursements growth.
Actual growth is 13.29.
Yeah, net of repayment.
We will take the question from Ankur Mishra from ET Now.
Hi. Congratulations once again for the quarter. My question will be regarding first of all your slippages overall. If you talk about the whole year, it is less than the last year. But is there any target for the next financial year? Also, you mentioned that you aim to reduce your cost to income ratio. While it has come below 50%, and we understand that due to wage revision and everything, it was up in the last few quarters. Is there any particular target which you can give for the next financial year? And also update on your operational subsidiaries from three.
See, when it comes to our slippage ratio, of course, our effort would be to keep it as low as possible. But yes, of course, there are certain slippages which cannot be avoided, which are a function of the macroeconomy. We'll rather like to keep it, the slippages just at the macro level. Whatever is something which is a function of the macroeconomy. So that is what our effort and endeavor is. Your second question is relating to our cost to income ratio. Of course, we have been maintaining that we would like to bring it below 50. So hopefully, though as of now it doesn't, as far as the numbers are concerned, it is not showing up. But it is essentially, if at all we will take off away the one-offs, those one-offs, if at all we will take away, it will be actually less than 50%. So our effort would be to keep it at around this level only, because as I mentioned, that there is a limited scope for reducing the cost. But yes, of course, income we can certainly improve. That will be our effort going forward. And your third question was relating to the activity level, status of our operational support subsidiary. Operational support subsidiary is doing very well. And as of now, they have hired more than 8,000 odd feet on street. And it is supporting our rural semi-urban branches. Going forward, we plan to have the feet on street for the urban and metro locations also. We have already got the required approval. We are putting in place the structure so that we should be in a position to reach out to the customer at their doorstep as well.
This is the HTM allocation, 67.
Yeah, HTM allocation, somebody was asking, it is 67.50%. 67.60%.
Next question is from Mr. Mayur Shetty from the Times of India.
Congratulations on your record profit. I think it's the highest by any entity this quarter.
Thank you.
My question was, is this a kind of Goldilocks situation as far as the ratios are concerned? Do you see any upside from here on the financial ratio side and margins?
It will be our effort to have an improvement in these ratios also. Dil mange more.
Shivam Pathak.
So on capital adequacy front, you said it's 14.28%. Do you think that in the upcoming this financial year, equity fundraising would be required?
As I was mentioning, that our ROE is higher than our loan book growth. So that actually gives us a natural source of equity. But yes, of course, we are open if at all required, and we expect that with this kind of a equity levels, we can easily support 7 trillion worth of a loan book growth, which actually turns out to be about 20% loan growth. So, but we will keep on evaluating the situation. If required, we will certainly raise the equity. But yes, of course, we are quite open for 81, and hopefully in this year we will be raising 81 in sizable number also.
So on this Yes Bank stakes that you said you don't want to comment, but still it is a buzzing topic in the media.
I will not be in a position to comment. I will not be in a position to comment. I don't have anything which I can comment on.
Thank you, sir.
Yeah.
Next question is from Anurag Shah of Union of India.
सर सबसे पहले तो बधाई आपको नतीजों के लिए। सर बस यही समझना चाहेंगे जिस तरह से क्या इस वित्त वर्ष के अंदर वैल्यू अनलॉकिंग जो आपकी सब्सिडरी है उसके बारे में कुछ प्लान रहेगा, पेमेंट सब्सिडरी और इंश्योरेंस की लेके, और इंश्योरेंस से इसलिए भी पूछा हूँ क्योंकि जो छोटी छोटी कंपनियां भी है वो भी लिस्ट होने के लिए जा रही है, तो उसको लेके किस तरह का प्लान रहेगा?
देखिए ऐसा है कि our philosophy differs a bit on this particular aspect. We would like to go for listing of the insurance subsidiary once the critical size is there for the insurance subsidiary. And I believe that we will try to do that, but it is too premature to really comment on that as of now. As far as the payment subsidiary is also concerned, we have not really deliberated in the board on this particular subject, and I believe that there is some room for that company also to grow, though it is growing very well, but there could be some more scope for it to improve. So then only we will take it to the market. And after all, if at all we are going to the State Bank name tag, then it should be a respectable number also with which we should go to the market.
सर हाल के दिनों में एक दो पेमेंट्स बैंक थी जो बंद हो गई, तो उसका कुछ मार्केट शेयर वगैरह आपको लिया, क्योंकि आपकी प्रयास रहा था, आप सभी ब्रांचों को निर्देश दिए गए थे कि आप जाइए मर्चेंट पे POS लगाइए वगैरह, तो कितना वो फ्रूटफुल रहा, कितना मार्केट शेयर?
No, we have been in a position to get the POS machines installed. Exact number I would not know, but yes, of course, there was a good traction across the country. This is something which I can say. And I would also like to mention that many of the customers were very keen to come to State Bank of India as compared to going to any other bank. This is my immediate reaction, but maybe if Mr. Sharma is there.
More than 50,000.
In the last month, that in March, we were able to get more than 1,70,000 merchants. So
Last month.
last March.
Okay, in the month of March. So that really reflects the kind of attraction which we have in this particular space.
सर आखिरी सवाल होगा सर, हमने देखा है कि प्राइवेट बैंक भी बड़े जो हैं उन पे RBI रिस्ट्रिक्शन लगा रहा है, PSU बैंक में भी लगा रहा है डिजिटल ऑनबोर्डिंग को लेके। SBI सबसे बड़ा बैंक है, तो अभी आप कह रहे हैं कि 61% ही आप डिजिटल ऑनबोर्डिंग कर रहे हैं, तो क्या जो RBI जिस तरह से रिस्ट्रिक्शन लगा रहा है इसलिए वजह से भी आप थोड़ा स्लो चल रहे हैं, कॉशियस चल रहे हैं?
नहीं, ऐसा कुछ नहीं है, ऐसा कुछ नहीं है। देखिए ऐसा है कि when we come out with the multiple channels, it is not that we want to impose a particular channel on the customer.
And we also have largest.
We have got the largest distribution network, more than 22,500 branches in the country. So with 22,500 branches, but we are very mindful, if at all we are banker to every Indian has got different taste. Somebody would like to come to the branch, somebody would like to do it digital. So we should have all the functionalities available so that we are in a position to meet the customer's ambition and expectations.
नहीं, लेकिन सर आपसे जो सेकंड नंबर पे थे वो नहीं कर पाया, उन पे बैन लग गया।
ये मत पूछिए हमारा नंबर
ये
कब
जो
आएगा,
टच
हम लोग काम कर रहे हैं।
टच वुड, मैं सब इसके ऊपर टच वुड नहीं कहूँगा।
Next question is from Rajesh Mishra.
लेकिन एक चीज मैं उसके लिए कहना चाहूंगा, which I mentioned earlier also, when it comes to the technology spend, we are always cognizant. There is no cutting the corners when it comes to technology spend. So that's why for us, this is very sacrosanct. Yeah.
Next question is from Mr. Rajesh Mishra from Zero Business.
सर मेरे दो सवाल होंगे। एक सवाल ये रिसेंटली बॉम्बे हाई कोर्ट का एक ऑर्डर आया था जिसमें ये कहा गया था कि पब्लिक सेक्टर बैंक्स लुकआउट सर्कुलर नहीं इशू कर सकते, ये चीज नहीं है। ये पब्लिक सेक्टर बैंक के लिए SBI के लिए कंसर्न की बात है, और क्या इसको लेकर कोई चर्चा सरकार के साथ या ITA के साथ होगी आपकी? दूसरा सवाल ये होगा कि जो पहले कुछ नेगेटिव सेक्टर्स माने जाते थे इंक्लूडिंग टेलीकॉम, तो उनको आप ही अब आप नेम करने को तैयार होंगे?
See, your first question relating to LOC, I would not like to comment because this was a guidelines which was issued by the Government of India, and they will have to take a view, and they only empowered us, so I would not like to comment on that. Your second question relating to the telecom sector per se is not bad, but yes, of course, individual entities have to be appraised. We have never banned lending to telecom sector. We only look at it if at all it's a viable, it is sustainable, it has got adequate cash flows. Wherever it is justified, we have been supporting them.
Next question is from Ashish from BTN.
So, follow up to Preethi's question, you spoke about the last 3 quarters private demand pipeline has been very high. So, there are concerns at the same time expressed about private capex not really happening. So, in context of that, is it much more to do with working capital where the demand is coming? What is the drawdown which or conversion into disbursals which you are seeing? Also, if you can speak on pricing of corporate loans, have you been possibly pricing is a problem there? If you can just elaborate, sir.
See, when it comes to the corporate loan, we are seeing demand coming on term loan as well as on working capital. When it comes to utilization of limit,
51 to 61.
Huh?
51 to 61.
Yeah, it has improved. Utilization of the working capital limits have improved from 51 to 61%. And 51% to 61%. So about 10% improvement is there in the working capital limit utilization. And when it comes to term loans,
Undisbursed 18%.
so about 18% is undisbursed now, which used to be much higher. So about it has also availment has improved in term loan. Your third question was relating to pricing.
Yes, sir.
So pricing is normally we're in a position to ensure that we get the right price for the risk which we are undertaking. That we are in a position to ensure.
And one more question. You spoke about general trend of improvements across many factors continuing for the bank into the new fiscal as well. So since banking is a bit cyclical business, so what are the factors which you be wary about? What are the things which you be possibly cautious about, which you would consider as first signals of some stress which is building up possibly, and then you will act accordingly to mitigate it?
See, the point is that what you mentioned, banking is more than cyclical. Banking is proxy to the real economy. If at all you have got faith in the real economy, banking will continue to do well. So, for the bankers, it is very important to keep on looking at the real economy. If at all there are any signs of concerns, then they should accordingly revisit their business models.
What are those right now, sir?
Concerns for economy could be anything. If at all we are deep into that, then we'll have to revisit. But in any case, let me also tell you, when we decide our exposure norms, single party exposure norm, single industry exposure norm, we are quite mindful in terms of the risk which are inherent in such sectors and such industries. So they are very carefully defined.
Next question is from Janet from Moneycontrol.
If you could give some numbers on the number of employees you plan to hire in FY25 and specifically for your tech business, any numbers?
An ongoing process.
It's an ongoing process, but depending upon the requirements, wherever the requirements are, we are quite open for hiring. There is no such ceiling, there is no such restriction, and much of it is the availability of the skill. Vishalji, do you have some numbers?
Sir, actually we have already onboarded, it's all we are in the process of onboarding 2006 professional officers, 8,424 associates, and CEOs also, the result is not declared yet.
So somewhere around about 11 to 12,000 employees we are in the process of hiring, and I think our retirement also. These are the general employees, but some of them would be actually our the way we carry out this technology based employees. No, we actually are having a system where at our associate level and at officers level, about 85% of them who come in are engineers. So we give them some exposure in the branches so that they should be conversant with the banking, and thereafter we start channelizing them into our business associate role, and also some of them are channelized into IT roles also. So that's how we have got this system. But yes, of course, it's an ongoing process.
My second question is basically on electoral bonds. So you
Sorry, I think this is not a forum where we should talk about that.
Any comments on you?
Sorry?
You will ask for some time and after Supreme Court order.
No, I think it is, as I mentioned, this is a press conference for the media results only. Be respectful to the focus area.
We'll take the last question from Mr. Abhijit Lele of Business Standard.
Good afternoon, sir. The question is with regard to the branch operations. Since you are taking up your emphasis on the operational subsidiary, and also simultaneously you have increase in the digital side. So how does it reflect on the branch plans? How much you have rationalized?
No, branch plans, no, for a country like India and the kind of growth which we are seeing, there is ample opportunity. Only thing is we have to identify the pockets where we need to expand physically, and also when it comes to digitally, the aspirations of the customers are always increasing for consuming the digital services, and that is the reason why we are investing well in the digital space also. So I think it will go hand in hand. There is no rationalization question. We only will see that how best we can serve the customer from our delivery platforms.
FY 25, how many you will intend to open? How much you have done in FY 20?
Number I would not have, but we have been wherever there is a scope for opening the branches.
200 branches, Praveen, are you there?
Yeah. So we have opened around 139 branches last year, and we plan to open around 300 branches this year. And the last question is about that new framework for treasury investment scheme, where now you can hold the corporate bond or the HTM category. How exactly your approach is going to be when it comes to the corporate?
Sorry.
You can hold in HTM, and what is going to be your approach, corporate bond?
Yeah, so we will take a call. I think some of them, the corporate bond movement too from AFS. Generally, we keep corporate bonds in AFS for trading opportunities. If it is only for coupon, then we normally move to HTM.
Sorry? Overseas offices are doing very well. It has grown about 9%, and it was a very conscious call. We could have easily continued to grow the pace at which we are growing till the third quarter. But yes, of course, it was a very conscious call we took that we should moderate our growth in the overseas operation.
Mainly in
it was all in the trade finance, and our NIMs are also decent in the overseas operation.
46,646 crores is the number that we have grown by.
Yeah.
Thank you all.
So just one general thoughts on this RBI draft and just your thoughts.
Only it has come day before yesterday, no? So we are evaluating. Okay.
Of the 4 billion loans that you've said is in the pipeline for FY 25, if you can guide how much would be the top 10 conglomerates or top 10 group exposures?
I have not.
That can be.
This kind of a detailed analysis has not been done. We only look at it what business comes in. We don't look at it who is sending this way.
We are bankable business.
Thank you all for joining us today. We have arranged some refreshments
Sorry?
and snacks. Please have it.
Sorry? 85% हमारा जो इंटेक है ऑफिसर्स लेवल पर और एसोसिएट लेवल पर वो इंजीनियर्स आते हैं, एसोसिएट एंड प्रोबेशनरी ऑफिसर्स. That is the process. That's the process which is going on. It is not by policy. It is not by policy, but by it's a choice. Sorry? We are always very mindful in terms of the quality of lending. If at all we are lending to NBFC, we have to be very mindful who are supporting them. Government of India, larger groups, who are supporting them. Okay. Thank you very much.